Welcome everybody to the fourth day of Digital Entertainment World. Very excited about today's program. Let me just make a note that we're really enjoying the conversation going on in the chat. So please introduce yourselves. Feel free to drop links in. The conversation's been great, and we love the vibrant community that we have here at Digital Entertainment World. Also, if you have questions for the panelists, please put them in the Q&A area, which is just to the left of the chat, so that it's easier for our moderators and panelists to get your questions. We'll try to get through as many as we can throughout the day. Today's program is going to run from 10 a.m. Pacific or 1 p.m. Eastern, and it ends at 1:45 Pacific today. And we'll be having 15-minute breaks between each of the sessions. Before I introduce our panelists, I just want to make a note about RightsTech. And 5 years ago, Digital Media Wire partnered with our really good friend Paul Sweeting at Concurrent Media and launched the RightsTech project. If you're not familiar, you can check out RightsTech.com. And I just want to applaud Paul on the amazing job that he's done over the years. He publishes regular news on what's going on in the industry, has done dozens of events with us, and I'll be introducing him shortly. But he does a tremendous job. And if you're not familiar with the publication, it's free to sign up. You ought to check it out because it's really covering news that is important to this community. All right, without further ado, let me introduce our first session. Keynote conversation, the fintech side of RightsTech, modernizing payment of royalties and residuals. As I say your name, please come on to screen. Mike Hurst, CEO and founder of Exactuals. Welcome, Mike.
Good morning, everybody. Thank you so much for having me.
Verna Chao, Executive Vice President, Treasury Management Solutions at City National Bank. Welcome, Verna.
Hey, Ned. Thanks for having me.
And Jason Kassin, CEO of FilmTrack. Welcome, Jason.
Hi, thanks for having me.
And the man of the hour, Paul Sweeting, founder and principal, Concurrent Media. Welcome, Paul. Take it away.
Thanks, Ned. Hello, everyone. Glad you were all able to join us this morning, this afternoon, this evening, depending on where you are. We've been drawing an audience from around the world, so we're crossing multiple time zones. And yes, I'm the co-founder with Ned and Tinzar of the RightsTech project, and I thank Ned for those kind words. We have a great group here today that sort of gets right at the heart of what we focus on at RightsTech, which is the intersection of rights management and licensing and payment collections or revenue collections and payments, and ways of improving the way those monies flow within the industry in relation to the rights. So I wanted to start with Mike. 2020, it's not news, was a very challenging year for the world,
many ways.
For many people, and of course many industries, not least being the media and entertainment industries, which was hit with all sorts of disruptions to production, to live performances. It was highly disruptive and costly to a lot of folks and a lot of companies in those businesses. But at the same time, there were some bright spots, and I saw recently, Mike, that Exactuals actually had a pretty good year in 2020. Can you first of all tell folks a little bit about what Exactuals does, and what you were able to achieve in 2020, and what was driving that?
Sure. Well, I appreciate that, Paul. I mean, first of all, let me say, while we're happy to have grown and to have had a big year, you don't want to claim any kind of victory from the year that we had with COVID and the pandemic and everything everyone has gone through. But that said, any business that helped to enable work from home, that helped to enable the digitization of manual processes, that helped to remove paper from any kind of payment process, had a successful year. Because what we saw, shortly after the stay-at-home order, was obviously studios, payroll companies on the film and TV side, and then record labels and publishers and PROs on the music side, having to figure out how to operate in a remote environment. So what Exactuals does is we're a fintech company. We make payments and we provide reporting, and we're focused on the royalties, residuals, and participation side of the industry. So we like to kind of say any payment that requires like a lot of explanation, we're the team for that. And so what we saw was that in film and television specifically, there were two big impacts for us. One was that studios and payroll companies who had been kind of thinking of onboarding to Exactuals and digitizing their residuals, automating their workflows of reporting through the guilds, sort of rushed to do that at a more accelerated schedule, which is great. And then for the recipients, for the members who have access to direct deposit, we had a big adoption curve last year because people didn't want to deal with the mail as much. They didn't want to go to the bank anymore. And so as a company that creates an automated workflow, takes paper out of the process, that was a success. On the music side, it was really a tale of two parts of the industry. So obviously touring really ground to a halt, which was sort of like the equivalent of the theatrical side of film and television. But similar in both industries, streaming went through the roof. And so, as a market, if the main thing that we're concerned about is the content being consumed and paid for, we're in great shape right now. And obviously we look to the parts of the industry that need to recover. But the volume of payments and the volume of dollars, especially tied to EST and to streaming last year, really spiked. And as a fintech company that supports the businesses that pay those royalties and residuals, that was rising tides for us. So that's right. And so in the past year, we hit two big milestones. We crossed $1 billion processed all time for the company, which is a big one for us and something we're very proud of. And now I'm happy to also announce that we are beyond $1 billion run rate annually. So the acceleration is real. And, I will say, and this is the last point I'll make, and I apologize if I'm speaking too much, but, we're going to get back to some form of normal before too long. I think we all hope that and believe it, but we're not going to go back to the old ways, right? Anything that required people to pick up and move paper around and boxes of checks and Excel reporting, that we're not going to go back to that. And so I think that the move towards a digital future is very real. It was accelerated last year. We're here to support the industry, and we think the growth will continue as streaming continues to explode.
So Jason, we will, God willing, and the creek don't rise, get back to some sort of normal at some point, but it's not going to be the same normal, is it?
No, and I think, just building on what Mike said, I think that what we've seen with the pandemic is an acceleration of trends that were happening, for years, but they just happened in a very condensed time from a business standpoint. One of which we're seeing obviously is the collapse of windows and the elimination potentially of whole windows. Certainly, sadly, what's happening on the theatrical distribution is making VOD more of the tent pole for distribution, not just for the new entrants, but for the existing studios. You're also seeing that is putting stress on existing systems because the existing systems were not set up for the new modeling of the deal types. The new deal types are very different for VOD. And so from a rights standpoint—
Hold on, let me stop you there. How are they different?
Okay, it's a good question. They're different because they're based on dynamic fee calculations. A lot of these deals with VOD providers, the video on demand providers. So they are, instead of onesie, twosie titles, it's the entire library licensed to a particular service. That service is maybe by language, by territory, by right, as we've often done deals, but it's a massive amount of content at once, and it creates a difficult arithmetic and rights problem. The arithmetic problem is all the allocations need to be spread accordingly, and they're all based on performance. And then the rights, obviously are very granular and can be different. It's like a Rubik's Cube, or actually it's about several thousand Rubik's Cubes superimposed on one another. So if you were trying to do this in Excel or with your legacy system, that just is no longer going to sustain for the types of deals that are happening, in terms of these deals where it's, for this set of titles, it's 10%, for this set of titles, it's 12%, but only for the first 6 months and excluding the UK. And by the way, if it exceeds 1 million, then, it goes to this register and that, those sort of tiers. So the key thesis here is that the rights and the financials are deeply, deeply connected to one another.
And Verna, Grayce, City National Bank over the last 2 years, 3 years, your company has acquired both of these two schmageggies here. What the
hell is a bank doing here, right?
What the hell is a bank doing here?
Yeah, so definitely the last 2 years have been kind of our focus on this area, but, it really does go back. City National Bank has been, an active member of the entertainment community from a banking perspective for the duration of our 65 plus years. We've really focused a lot on the talent side. And we've done a lot of automation that Mike was kind of speaking to in that space. As a bank, trying to reduce the need for our clients to be on our systems. Today they call it embedded banking, but the idea is really, how do we think about the workflows and not the transactions? And so, as we've matured through the talent side of our servicing, we really started looking at the whole payment flows and ecosystem. And that's where, the capabilities of an Exactuals that really deliver on that value of automating those payments, the capabilities of a FilmTrack, again, that are up at the originating point of those rights, that's where the payments flow from all of these rights and distributions. And as a bank, we really feel like that embedded banking is the future. We've been building out our integration platform.
Explain that term, if you would, embedded banking.
Absolutely, yeah, it's the new buzzword. And I was going to say, we've been doing it for 10 years before they called it that. But it's the idea that all the banking capabilities, the receivables, the payments, the liquidity management, those don't necessarily need to be done at a banking platform. You can actually integrate those capabilities so that they become seamless within the actual workflow of that end user. So someone who's managing the finances at a business management firm, at an agency, at a guild or production company doesn't want to spend their day doing the banking. They want to do their work and then have that banking component actually execute. And that's really our vision in the entertainment space, is to provide that, but really in a tailored way.
And are there more pieces to what you're trying to build here, Fiji, that you haven't put in place yet, or that you're looking to put in place?
We definitely have a vision for where we can go. I would, again, referring back to Mike, I think that there's a lot of table stakes around taking the paper out, automating, kind of just really getting the foundation. I was speaking to someone earlier and I said, we kind of built Route 66, but we feel like the interstate highway system is where we really want to go. And so we really do think that those key channels of automation and the core payments, but we really feel like when you get that full vision, the full vision of digitization, you start to create new marketplaces potentially with the data, new marketplaces with some of the liquidity. So ultimately, we do feel like there's a lot to go, but we've kind of got to get these real core foundational.
When we were speaking earlier in our prep call, we talked a lot about transparency and the growing sense among rights owners and creators and artists that have become accustomed to getting quite a lot of feedback from the marketplace quite quickly from the usage of their content on different platforms, and being able to do a lot of analytics around that. There hasn't been heretofore as much feedback and transparency on the payment, the collection and payment side. Can you talk about that a little bit, Mike? And
yeah,
or Jason?
So I will say that about half of our business is music industry oriented and about half is film and TV oriented. And typically music has been, a few years ahead of the curve. And part of that is that the internet forced the modernization of that industry and its delivery models a little bit sooner. And so if what we see in the music industry, the level of transparency and reporting around the success of a product, where it's being adopted and sold, how you're doing, this quarter versus last quarter, year over year in certain markets, it's a huge amount of reporting and information. And that's because the creators in that industry that grow up doing DIY on YouTube and eventually Spotify, and they use great services like CD Baby, they get a lot of feedback and they're used to it. When they reach, a big label contract stage or a big publisher contract stage, or they sign with a large PRO, they don't want the level of insight to reduce, of course not. And when they sign with a big agency, they see that data as being super collaborative. And this is how we decide what to do next. And so we're seeing those larger incumbents in that industry really adopt better reporting, more instant reporting, a higher level of granularity and feedback. And I think over time, film and TV will do the same. What we are seeing right now in film and television that's great is at least making the information that's always been available easier to find, right? So you look at a guild portal or a studio portal, now they're saying, here are your reports, here's where you find it, this is what the payment was for. Yes, the payment was cashed or not, it went to this account. The data that you need to just sort of operate is now present, and Exactuals provides that. The next layer of information around performance and success and predictive analytics around what we might want to produce or acquire, what something might be worth, is happening sort of within the companies, but not yet throughout the ecosystem, but I think it will come. And it's definitely going to be driven by software companies and fintech companies, and then adopted by those players.
And Mike is right in that the music industry is often a bellwether for film and TV. And you saw, if you track what happened 15 years ago in a digitization model for music, similar thing is happening now, again, accelerated because of the pandemic. So we're seeing a lot of the same trends, and then a lot of the same breakdown of the cultural barriers, because some of these aren't technical challenges. In fact, many of them aren't. Many of them are, we have a 120-year-old industry that is steeped in opaqueness. And so it's taken a lot to bring a level of transparency, but I think the end user, the talent, the performers, as Mike said, they've come up as part of a generation where transparency is, the currency of the land. And so I think that trend you're going to see continue, and it's going to push all the players to offer their data in a way that is consumable and actionable.
And if I could add, Paul, some interesting things are happening on the financial services side, which dovetail nicely with this transparency. It's in velocity as well, and it's part of what we really think is the value we can add. So there's some new data standards that are coming online, and the way I like to describe them is it's going like from 3G to 5G. The amount of data that's going to travel with the payments is going to really provide a lot of that transparency. And then there's new payment rails. There's a real-time payments that is now catching steam for a lot of use cases. So the velocity of the payments is going to go more quickly. So I think systems like Exactuals and FilmTrack, and they Mike mentioned kind of how things are housed there. Historically, then the payment just went with a to, from, how much. A lot of that, we can help now transport, which will create even more transparency and that velocity. So two-edged swords probably, but we think that there's a lot of upside.
Totally. And sorry to jump in as well, but the data that goes with it becomes collaborative. The discussions that an actor has with their guild should not be around, did the payment get cashed or not, or how was it calculated? They should find that information, understand it. They should be talking about strategic things and ways to grow and roles to take, and the interaction between talent and agencies are the same. So many of those phone calls historically have been, mechanical. Where's my payment? I can't find it. Where was it cashed? All of that can be solved, and now the discussions are much more strategic. And so we believe that level of transparency and the providing of collaborative data rises all tides, makes more use of time, puts people on more strategic tasks, and should ultimately grow the industry.
Going back to the point of music being something of a bellwether for other industries. The music industry has not always happily, sometimes kind of fitfully, adopted systems of micropayments, basically because you have performance-based revenue streams. That is, every time a track is streamed on Spotify, that one play triggers a cascade of payment obligations somewhere down the line to someone. That's obviously added layers of complexity to managing all that. But Jason, I'm curious whether you think, the film and television industry isn't really there yet on that front, and its legacy has been sort of long-term licensing deals with quarterly or semi-annual payments of licensing fees. Do you envision the film and television industry, particularly as the windows shift, operating or becoming more like the music industry in that sense?
Yeah, and it's already happening. I mean, there are already these sort of performance-driven VOD deals, and it creates a real challenge because if you can imagine, tens of thousands or thousands of titles, all with different performance relationships. And then remember, each title is like its own business model, meaning the people who have to be paid based on that, based on the income in, the participants, the writers, the actors, the producers, the licensors, the financiers, et cetera. Those complex waterfalls, some of which have very sophisticated monies, are really impacted by the new revenue streams. And trying to calculate that is going to be a real challenge. And we have to set the table now, as a lot of the studios and networks are, because I predict, just like we had the roaring 20s in the in the wake of the Spanish flu, culturally speaking, there's going to be a watershed of pent-up demand for content. There's going to be an enormous amount of new content. Once we get past this, strange time when the Earth is off its axis and we return to normal rotation, I think there's going to be a massive change. And if you study the history of pandemics, there's a great book, Jennifer Wright, Get Well Soon, and she talks about how the post-Spanish flu, the impact it had on arts, and particularly the early film industry. And in many ways, it helped really accelerate, what happened, jazz and music and film, et cetera. And I think we're going to see a similar impact, and we had better be prepared for it. It's like we can see the wave coming out in the distance, and we're just chilling with our surfboard, waxing it. We got to get ready. And I'm not a surfer, but I imagine that's the right analogy.
I totally concur.
There's not a lot of surfing in Brooklyn, is there?
Well, actually, we do have Sheepshead Bay, but I won't get into it.
Well, yeah, that's true.
Yeah.
That's true.
If I may just add, Paul, because we process both and I see both, the issues with payment volume in music is different. It's a data problem, and you hit it right on the head. We get gigabytes of data on music royalties that are absolutely, massive, massive files, and then they lead to one quarterly payment. In the residual space, which is unlike participations, but in the film and TV residual space, it's a stream of payments. It's constant. If and when film and television follows suit and adopts more of a user-generated pricing model, if it does go per click the way that the music industry has, the systems are not going to support that on bulk paper checks. So what we see our job as being is prepare for it, be able to digitize it, and if we're going to continue to issue payments, let's make sure people can have direct deposits so that we can be processing them without delay and cost. It doesn't make a lot of sense to spend $5 on a 20-cent check, right? That's what we're trying to eliminate.
And I would say from a banking perspective, we have an interest in not perpetuating the paper check world as well. That's another reason our involvement in entertainment, we have a strong stake in driving digitization, even from our own, operational perspectives.
Mm-hmm. I want to shift gears a little bit and talk about, as as you guys do your things and bring measures of automation and transparency and cost reduction to efficiency to the payment, to the money flows, basically. How do you think that could manifest on the finance, the initial finance side? I mean, there's been a huge spike in sort of traditional investment capital coming into the music industry, primarily buying rights, buying publishing catalogs. You're starting to see, Jason, some rumblings of people trying to develop new film financing models in anticipation of a change in how movies are distributed and where the money is generated. Can you guys talk a little bit about how what you're doing may be reflected in that?
Well, the transparency is critical, because there used to be an old joke in Hollywood, still somewhat true in some quarters, which was, how do you become a millionaire in Hollywood? Start out a billionaire. But that is changing because of this increased transparency. If you're going to make an investment, you're not just doing it for the love of the game. You're trying to see a return, and you're trying to understand both the revenue against the expenses and how that flows down. And each of these, as I said, is like a business, and the business formations here and the different financial constructs that are allowed. Now, this is where the bank comes in, because a bank can look at something and securitize something based on good data. And that's what we're providing. And if the good data is there around, past performance of a particular entity in terms of their ability to distribute and sell, or the value of their library, the content and the nature of the content and what type of distribution it has. So distribution is becoming so much more, I remember speaking to financiers and they would ask me questions. I'm like, well, what are you doing about distribution? They're like, I don't even know about distribution. It's like, so you're investing in something and you have no idea where the return's coming from. It's just like, you're excited because you're going to go to an award ceremony, which is great, God bless. But, it's important to understand, where the revenue is coming back and how eventually it will come back to the investors. And I think there's a few different models. Obviously, you're seeing a lot of syndicated, online, Kickstarter type things and slated, and they're all really cool stuff happening. And I think again, the theme on all of it is transparency and increased volume. And the volume and the ability to transpose these thousands and thousands or millions of streams of data, calculate who is owed what, and then send that back out. It's a real data challenge and a calculus problem. And that's where, that's the world I'm trying to live in.
Yeah, and I would just
I'm living a calculus problem.
I would support
my condolences.
I would support Jason's hypothesis in that we see also the predictive capabilities, right? When there's sort of the real world flows that we'll be able to see from a financing perspective. But to your point, in advance of that, as these data sets mature, you can start to get really good predictability, which is ultimately what banks care about when they're securitizing assets. And these are assets that can be securitized. And so we think that there's a lot of potential there, particularly for a bank like City National Bank that also understands the dynamics of this industry, right? We've been in this industry for 65 years. We understand the risks and how they work. So adding this around that provides potential support for supporting new financing models, shall we say.
And then on the long tail of that, Paul, just to answer a question that maybe was coming next, is once again, if you look to music and you hit it right on the head, the amount of capital pouring into rights and music right now is unprecedented. And it's happening because hedge fund investors, private equity investors, and other just value investors are seeing that the streaming volume is doubling every 6 years or so. And if you can buy something at a decent price now, it will double naturally over time. I think you may see the exact same thing in film and television. And as those rights become easier to measure, as there's more transparent data around usage, it becomes easier to value those assets or the roles that certain people played in those assets, then it might provide liquidity for those rights in the same way. And the investors that are buying music publishing, for the most part, aren't music industry people originally. They're financial professionals.
Yeah,
right?
exactly. I mean, a lot of
They
institutional
love anything
investors.
with yield. And it's more fun at a cocktail party to talk about owning a percentage of a Metallica track than a government bond, right? So yeah, I think you can see that happening in the next
Depends
couple
on the
years.
parties you go to.
That's so right. So right.
Jason, that hasn't really happened yet, has it? In film and television, you don't see a lot of M&A activity around catalogs.
Oh no, it's there. I mean, look, it's harder to evaluate. There's sort of a black magic to black art to figuring out how to value a library, and there are whole companies that just do that. And City National has been very involved with that through the years, because that is how we securitize, lines of credit or library valuations that indicate for M&A activity. But I think, as Mike said, as the data becomes more available, it becomes easier to conduct those sort of exercises. But that M&A, when libraries are bought and sold, content. Now, content is tricky. One could argue that certain music is a little more evergreen and it's played more often. Metallica hopefully will be with us forever. But a dated 1989 film with Jean-Claude Van Damme, all praise be him, may not have the same terminal value as say a Christmas movie that is going to be played forever and ever and always. So there are nuances to the content type and how that content type will be manifest, but certainly one of the things that I think people will see as a value is, and this is something that VG and Mike are really involved with, is right now a lot of talent, they can't predict their own investment or future, because they know when they get paid because they open the mailbox. There's no notion, or check their bank account. There's no notion of predictive. I'm gonna, I can plan the next 4 years. The data that we will have, and the data and the trends that are going, is that an actor, producer, writer, or rights holder would be able to have a more holistic sense of what their revenue will look like, and they can make better plans, whether it's sending their kids to school, or should they buy that house or not, or whatever it is. And they should definitely send their kids to school. We need more kids in school. But I think that's going to help make good financial decisions, and that's where as a bank, I think we want to be helpful and impactful in those sort of notions.
Yeah, that's what I was referring to originally, where we grew up was on that talent side, and understanding that the visibility to these upstream originations of that income and that it was really valuable. So Jason,
and are those sorts of revenue streams securitizable the way a music royalty, performance royalty stream is securitizable in the music industry?
It's not done today, but we do believe with the right amount of data and the right predictive models, absolutely. There's corollaries in the financial services. There's corollaries everywhere else where you can leverage it here.
When you see also, Paul, what you're seeing that Jason's mentioning that is occurring in film and television is, large participation rights, large production shares are being transacted, but those are big, heavy lift, due diligence involved financial transactions. What's going on in the music industry is much more agile. People can sell their personal royalties because there's data available that runs all the way down to the rights holder of of a musician. Once that mirrors into film and television, the market will really open in terms of licensing rights and potentially acquiring rights in time.
And we're seeing little bits of it, like on one of the royalty exchanges. I saw the Star Trek director rights, for the series of Star Trek films in the 70s and 80s, getting on there, adjacent to the Dire Straits catalog. So you're starting to see it. It's a little more unusual because of the complexities involved, but we're starting to see it more as, particularly as those folks get to an age of retirement or things like that, and they're looking for effectively an annuity and a way to monetize that.
We're coming up to our last few minutes here. We do have a couple of questions from the audience that I wanted to get to. Melanie Shark, this is for Mike. Do you believe Excel reporting is truly going away? From the standpoint of an online platform, PROs are still asking for Excel reporting.
All right, so Excel is maybe the best application ever created for computers. No, it's never going to go away. But I think large companies processing massive amounts of money to a huge volume of payees do not need to and should not be calculating the royalties upstream in Excel. And so I think the tools will modernize, will become more automated, and it had better if we go to a usage-based model at some point. At the end of that process, and I see it every day from our system, when we output our reports, we have a download to Excel button. People will always use it, but I do think upstream, the core systems are going to improve and replace it.
I'd add to that. I totally agree with Mike. The context of the data is going to become a requirement. Drilling down, being able to see in, and Excel just is never going to do that. So I think the analytical capabilities of platforms that allow you to actually seamlessly contextualize that number is going to be important. But no, Excel's never going away ultimately.
And Excel has implicit limitations in what we do because the multidimensionality aspects of rights and royalties make it challenging to even perform those calculations in Excel. And in fact, anybody who's tried it probably at some point, if they're doing circular deductions, they get a divide by zero error, for example. And there's a reason for that. And that's because it's a linear model, and you have to do some creative things and use Kramer's rule and do things like this to get the math working correctly. Was that too geeky? I was always told not to go too geeky.
Well, you're living in a calculus world, so.
Yeah, I am.
Tony Passagan, sorry if I'm screwing that up, Tony. Do you think tech like blockchain will play a part in the rights calculation? Who would have the ownership of record for label publishing and sync rights?
I am glad you asked, Tony. Yes, I think eventually blockchain will become integrated in a number of the solutions that are used to calculate and to track rights. What I will tell you about the music industry is that the problem they've got right now is not a database problem. The problem the music industry has right now is a data problem. And if you have bad data and you hash it to a chain, you're just gonna have a bad blockchain. So what you're seeing in the industry right now, the efforts around metadata and properly correcting ownership information in music is like a precursor to that industry really being able to adopt and leverage blockchain technology in a meaningful way. And then the second layer of complexity is it can't just work from today forward. You've got to onboard decades of old contracts and information. So it's not like a panacea. It's not going to work overnight. I think it'll have a role in the future, but we've got to get the data corrected first.
Yeah, I agree on it. And again, it's going to be the same as with in film and TV. It'll be a laggard to what happens in music because of the complexity, because of the dimensionality, the number of rights owners, et cetera. And just to go back, because I see some things in the chat about data and Excel and using analytics tool. And yes, we're seeing that particularly amongst more and more of our enterprise customers. They're moving to a Power BI tool. They're moving to taking our data and aggregating it with other data, putting it into a data lake or data warehouse and doing the sorts of analytics that we're all talking about here. But right now that's with their own data, right? It's not with, collective data, but it's the right path that we're going down.
And if I could put a little plug in for, why we also think there's strength of backing, bank backing companies like Exactuals and FilmTrack is all of the security and the InfoSec, around all of those things is really important ultimately, and particularly when you start getting into transactions. And so having enterprise level technology in this space, when you start thinking about, taking that data and who gets to use it and the value of it is really important. So I know it sounds, I think that's something you always have to think about. And we do from the banking perspective, being a regulated entity.
And Tony, just FYI, the final panel today on bridging the music data divide, there are some folks on that panel who are beginning to deploy blockchain-based solutions, Verify Media and Bitfury Surround. So you might want to circle back, tune in on that one as well. An anonymous attendee, but why is the reporting quarterly for the music streaming side? The artist would want to get paid sooner and get the reporting data sooner to know what was hot and what was not hot. Is this a legacy music label issue through and through?
It's actually not the case if you're talking about like Apple Music or Spotify. The payments come quarterly because that's the way the deals are structured between the DSPs and the rights owners upstream. But a lot of the data is available in real time. So if you're looking, to figure out how are we doing in Philly, how many nights can we tour there, how big of a space, that data exists. You're not waiting, 90 days for that. But the payments do come in a package.
Sasha Stoikov. I'm not sure if I'm close, but best I can do. How far are we from having tools that allow people to buy and sell shares in artists or in songs? What are the barriers to this kind of investment financialization? Well, I mean, there are some players out there that will allow you to invest in particular artists or particular songs. There are people like Royalty Exchange and Sound Royalties who are doing this on the music side. There have been, some limited efforts to do it on the film side, often involving blockchain and cryptocurrency, using that as a financial tool, a financing tool for production, and then fractional ownership of the film that ultimately comes about. That hasn't really gotten very far.
By the way, in the U.S., it has different regulatory considerations than in certain territories overseas.
Yeah.
So that's one of the limitations on that. But it's been for years, since as early as I can remember, people have been talking about turning the investment mechanism for film and television into a stock type situation. And there are regulatory concerns there.
Okay. Victor Pena? Will we see more licensing for podcasts for monetary by businesses and companies? Again, by the way, we have some. There's another panel coming up after this one that will be addressing that. But any of you guys want to weigh in?
I'll just say real quick: podcast, audiobooks, all new types of media. We're finding ourselves drawn more and more into that space. What I'll call an adjacent vertical for film and TV. And yes, it's an acceleration brought on by the pandemic. It was already happening, but we're seeing any type of content, whether it's audio visual content, same types of considerations around rights, financial enumeration, etc.
Yep, echo that. And look at the massive explosion in market cap for Spotify the last year. A big chunk of that has been because of their strategy to onboard podcasts and talent and exclusive distribution of those mediums. So yeah, it's a huge part of the future. And to your point, Paul, later you'll hear from some companies in that space like Spoken Giants, which we think is extremely exciting, that's working on rights for podcasts as well as other forms of media.
Catherine Hodges, have you seen a demand for alternative payment methods, PayPal, Venmo, so forth, for payments to individuals?
Yes, but not necessarily over direct deposit. So we pay at Exactuals in about 200 different countries, and it's a bigger issue for music royalties than it is residuals. And we offer PayPal. For what it's worth, it is far less than 1% of the payments we make. If someone can get direct deposit or IACH, they prefer that. It's a little faster. There are fewer fees involved, but it will come.
And I'd add to that, I mentioned it earlier, real-time payments is a new payment rail. We think that this is a key use case for that. So that same day, and it's got all the patronage of the data behind it as well. And it's more of an enterprise level payment rail as opposed to a consumer payment rail. And we think that that's one of the probably more robust ones that has a lot of upside here.
Mm-hmm. Anything but checks.
I'm sorry?
I said anything but paper checks.
Okay, so it looks like we're coming up on time. Ned hasn't poked his head up yet, but oh,
Hey there.
there he is.
You are right on the button here. So and if you feel free if you have some final remarks you want to make, but we should.
Yeah, if any of you had some final closing remarks, please throw them out there. Otherwise, thank you to all of the panelists. Thank you for all the questions. Those are some good questions, and looks like it's been pretty lively in the chat. I hope we have a recording of that chat because I'd like to go back and read it later. And stick around. There's plenty more RightsTech to come later today. Ned?
Thank you.
Terrific.
Thank you so much, everyone.
Thank you so much.
Thanks,
Stay
Verna,
safe.
Jason, Paul, great panel. We'll see you guys at the top of the hour, right at 11 a.m. sharp. We'll be kicking off the next session. Thanks.
Thanks,
Thanks, everyone. Bye.